Hello everyone, this is Corey Mitchell from TradeThatSwing.com, and this is your swing trading stock market outlook for the week of July 10th. And each week I just go through the same process, basically assessing how market conditions are looking, which then helps determine how aggressively I want to deploy my capital in individual stocks. And always some watch lists that I'm checking out which provide me with my trade setups. You can see the best swing trading stocks. That should actually say July. It has been updated. And swing trading watch list, which I look for specific patterns. That hasn't been updated in a little while, but I will update it this week as there were still some good trades on it. And then there's these other lists that I regularly update too, which may also provide some trade ideas for partaking in this uptrend we are in. So I go through 4 different segments of the U.S. economy, 4 different indices, because it just gives me a sense of how basically the average stock is doing, not just a very specific stock, because each indice is tracking a certain type of stock. And if we look at all 4, we get a very broad scope view of how, if we're looking at a stock, how it's likely to perform. So let's check that out. And from a price action perspective, pretty much a relentless uptrend in the more technology-based NASDAQ 100 index. Large cap stocks, which are the S&P 500, so different industries, but all big companies. An uptrend there too. We can see higher swing highs, higher swing lows, and it's accelerated a little bit recently. And the Russell 2000, it's been weaker. We don't have that overall uptrend, but we do have a short-term uptrend going on here where we had been moving lower, and then we start to see these transition to higher swing highs, higher swing lows. And same with the NYSE composite, which is probably our broadest index, which looks at all the stocks on the NYSE index or NYSE stock exchange, so a wide array of sizes and industries, so a very broad scope measure. And it has been moving in a slightly weaker uptrend. We can still see higher swing highs, higher swing lows since March. Now there is one thing to note here, is that we may be entering a consolidation phase here. You can see we've stalled out a little bit below these mid-June highs. Same with on the S&P. We went just slightly above them, but we've been pulling back. So this starts to look more like this area here. So we don't know how long it could last. It could be very brief, where we just get a couple little waves up and down and then we have a run, or we could end up breaking lower like we did here. So it's just something to be aware of. I still like this overall uptrend, and I would say conditions are quite good at the moment, but we just want this in the back of my mind. If we were, if we see a breakout from an area, here's where I want to be really aggressive. When we start to see patterns like this in the S&P, we've just broken out of a big range. So right now, I maybe back off a little bit. Maybe I'm not quite as aggressive. So let this chop sideways for, if it does that. Or if it starts moving up and then we see the indices consolidate a little bit again, that's the time to start looking for those trades and to get aggressive again, because we had moved sideways like we are here for a little bit, and now we've started to move up, and then you usually get that few day pause and then it starts going again. So just be aware of sort of where we are in that trend. So overall, I would say I'm still buying. I still like the conditions. I still like the uptrend, but maybe because it looks like we've just slowed down a little bit, maybe I just back off a little bit. And the Canadian index, a lot weaker, so you'd want to be a little more selective with Canadian stocks. We can see we're pretty much range bound, which means a lot of stocks, some are going to be okay, a lot are not going to be okay. So be very selective, and if you do get a nice run in a stock and then it stalls out, we are kind of stuck in this range, so it's definitely more of a kind of take what you can get environment in the Canadian market right now. Bitcoin, nice uptrend here, had the pullback. We've had this nice strong surge. We are consolidating. I wouldn't be surprised to see a bit of a dip below these prior lows as we saw here. as we saw here, you get the shakeout of all these lows, and then the price runs up. So you get the shakeout here, everyone sells, and then the buyers step back in. So I wouldn't be surprised to see that here if we continue to the upside. If we get a big drop off, then bigger range, not an ideal scenario for the bulls. But if it drops a little bit, that's what we call a false breakout. Traps a lot of people into thinking it's going lower. It doesn't, and then it snaps higher. So that's the scenario I'm looking for and would like to develop. Just a little dip into here, and then it starts going up again. I like those kind of trades. Let's look at the S&P 500. So this is a look more at health as opposed to just looking at the price action. So this tells us how many stocks are above their 50-day moving average in the entire U.S. market and in the S&P 500. The orange one is the S&P 500. And we can see 61% of all U.S. stocks are in short-term uptrends above their 50-day moving average. Not that the 50-day moving average is anything special, but it does give us a crude or rough idea of whether the stock is moving up. And we can see lots of stocks moving up. We're well above 50%. A lot easier to make money when we are in areas above 50%, like we have been in this area, as opposed to, we're kind of hovering below it or down here. This volume, not really important to me at the moment. ROC is just rate of change, the percentage movement of the S&P 500 per day. And when we get really big movements within a single day, that's more indicative of a downtrend. When we have small movement days, that's more indicative of an uptrend. So we can see when we're in these big movement days, more choppier trading, more downtrending type behavior. It tends to occur when the price is dropping, like over here. And you can see we really haven't had many big drops recently, and this is really starting to level out. So this is very indicative of uptrending type behavior, which is a good sign. This is the NYSE advanced decline line, how many advancing stocks minus declining stocks as a cumulative number. And the S&P has broken above all these levels, and the NYSE advanced decline line has as well. So that's just helping to confirm the nice price action we're seeing. This is up volume divided by total volume, and it really only matters if we get up to like the 90 area or down to the 10. And we haven't really seen too much of these important numbers lately, so nothing really to report there. You can see all the numbers here and what they mean. Sectors on the move. I still like the consumer cyclicals / discretionary. Sometimes it's called consumer discretionary or cyclicals. Technology and industrials. These are the three main ones. And we can see consumer cyclicals strong over the last week. Industrial is a little bit lower over the last week. Same with technology. But over the last month, consumer cyclicals, industrials, technology, those are the top. And over the last 3 months, technology, consumer cyclicals, and industrials. I bumped out communication services this time just because they've been quite weak over the last month or so, not quite performing as well. You still could keep those in there. And for the most part, we can see over like the last month, most sectors are doing pretty decent, with the exception of a couple. So most of the market doing fairly well, but these three, technology, consumer cyclicals, industrials, seem to be doing the best over, I would say, all three of these time frames. So what am I doing right now? Well, I'm deploying capital. Conditions are still good. There's that slight caveat I talked about where we may be entering that bit of a consolidation phase. I think really strong stocks will still likely perform well through that little consolidation period, but if we end up getting it. But, that's just in the back of my mind to maybe just turn down the aggression just a touch. And as I always talk about in these, I also day trade and I also passively invest, which means that I don't have to trade a particular way because I have multiple ways to trade. And what I like about that is that you don't feel as compelled. If conditions aren't quite right or the setups aren't quite there, then you have another method of trading, which is bringing in some revenue. So that's, I think, the ultimate goal as a trader is to basically be robust in the sense that no matter what the market conditions are, you have some form of trading that allows you to generate some income. And that's why I like to do these other things as well. Not a requirement, just something I like to do. And that is your stock market outlook. I hope you have a great week, and until next time, happy trading.